The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and this is the noon show, but recorded this morning at 8 a.m. with the futures. The S&P is down 4 at 29.07. The Dow futures are down 14. What I said to subscribers to my opening call, if at 11:15 the Dow is plus 30s or more, that'll be quite impressive action after yesterday's sharp run up to recovery highs in a leg D in the Chapman wave daily chart. And but if it's less than that or negative, there's a chance that we have some kind of consolidation today. Normally, let me just go to the live thing. So this is the Dow as we stand from yesterday's close. This is not the futures, but this is the close. There's that leg D with an alternate wave count, and it goes to D. But the real issue is that the MACD, the moving average convergence divergence, has not crossed positive, but it is really close to doing that. Yes, it could deflect lower, but we're going to be watching this very closely, and I'll explain why. The stochastic is at 81%. Over 80% is good, preferably over 90% is really good. So this is, it is a positive, confirming the leg D. Two things are very important. See this cup formation in the daily Dow? That is a breakout in a Chapman wave cup and ladle formation, which usually goes to a D. Well, there it is, a D. And what it says that there's a chance that it could come back and retest the lip on the left side, which is at 26,167. In the E-mini, I'll go to that, and that'll be the current price, ESZ. You'll see that within the context of chart formations, a pattern that we've been looking at for a long time is this cup formation. And there have been so many cup formations that have retested the left side lip, that is the left side top of the flagpole that went to the high, that you cannot rule out that the 29.2175 level will be tested at some point. First of all, there has to be, doesn't have to be, there's probably going to be some kind of a consolidation. That's normally what we look for. The other thing is when the Dow makes its leg D over the years, it's usually at or very close to a point where I would normally be short. Well, we were short. We took a very small 1.2% loss, but the real issue was at that peak C, should I have switched to the long side expecting a D and said, if it's very high, in other words, if it takes out the left side 26,211 high and closes well above it, it means that you could come back, but you might not even take out the left side low that was made at 26,030 just yesterday morning. Now that would be 2 days ago. And if that's the case, then having gotten so close, look at the weekly chart, having gotten so close to 26,616, still in a very strong pattern with the MACD and stochastic, everything about it suggests that it's happened before, that the rectangle formation has worked its way right to or just above the previous high. We saw that. Look at the weekly chart. Keep your eye on this one in the middle right here. Look at the S&P. Look at the S&P. It went 28.72s. Now it's at 29.16 as a high 4 weeks ago. Hasn't taken that high out yet. That was the very last one was a peak D at the 29.16.50 level in the daily. There's another cup formation. So these patterns just seem to be the patterns that are working the very best. And therefore, I did not want to go short, re-short. We had been short, just taken out. I didn't want to go back in. I wanted to let this play out. And there are a couple of reasons why. Because look, United Technologies, which is really it's now probably the oldest Dow stock since GE is out. DuPont goes way back to the 1929s. Look, DuPont broke out to an all-time high. It went to 140.33. I should mention we are long, but what's very important is it's only a leg C in the weekly chart. That and leg E now in the monthly chart, and there's that couple V-shaped formation that's gone to higher than the left side high. So to put the package together, let me just say I'm very impressed with, under all the geopolitical and economic conditions, that there's been enough selectivity in the Dow to lead. The Dow 30 has gone to recovery highs, but not yet all-time highs, which is at 26,660 made in January the 26th. That says to me that somehow, some way, even if we have some kind of a pullback, the bias has to be that there are enough buyers that really want to push the Dow higher. Okay, now let me show you a couple of other things. The QQQs are lagging. QQQ right now 182.44, made a high on the 30th of August at 187.52. Arch formation forming. In many ways, normally I would have just grabbed that down and said, yeah, we're going short because the Qs are lagging. They were the leaders. The SMHs are lagging. Their semiconductor index, a wonderful clue because it made a high of 114.55 back in March, hasn't even come close to it. It's at 106.04 right now. That's just telling us something, but it could also be telling us that there's a rotation, and this rotation, I keep talking about the scales of justice. On the one hand, you've got one sector, and the other hand, you've got another sector, and as one comes down, the other goes up. It isn't both of them going down at the same time. That, to me, is really important. That is probably the crux of the matter here, that we've had rotational corrections ever since the 2010 summer, where we should have come off the 2009 low and had some kind of a retest. There was no retest, just fantastic action as the weak stocks then became strong stocks as the strong stocks took a breather. It just keeps doing that. And I had identified that by saying we are along the steels which got hammered from the SLX steel vector ETF, goes to 51.93 back in May, and plummets down to 41.31 just 2 weeks ago. Having a nice rally, we are long. I think there's a chance that this could be part of that rotation. You will not know. You see, this is not what's happened in gold. You see the way that you've got this very strong candle from 2 weeks ago, last week, and this week another candle we've got 2.5 sessions to go, or 3 sessions to go. So anything can happen. But look at the difference between this weekly chart and this weekly chart. Here in gold. Gold trading at 1206.6, up 3.7, has just gone sideways. And there's a lowercase h that goes to a lowercase m formation. It just doesn't seem to be able to get traction to the upside. This is not one of those really strong V-shaped patterns that I love to see. There was one off the low back on the round about the 14th or 15th of August, and it went from the 1160s up to 1220, but now it's stuck in the middle of the range. That shouldn't be. That's sideways action. And if you look at the dollar right now is down 7 cents. Not a great pattern, but considering that it was at 88 back in February, runs to almost 97 in August, and then has come back. This is still a pretty decent pattern chart. I'll be back in a moment. Basil Chapman, early show being recorded for replay at noon. The Dow futures are down.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9700. 877-518-9190. That's 877-518-9190.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, so to continue the analysis, what I showed my subscribers to my opening call newsletter over the weekend was that the 5-year T-note yield, the monthly chart, has got this huge bowl formation. We saw this kind of pattern back in 1999, 2000 in gold. And what happens is this pattern, the longer it takes and the shallower it is, it's a bowl pattern, not a cup pattern. When it eventually breaks to the upside and takes out some key left side resistance levels, the yields can go much, much higher. In this case, the 5-year has really been leading the 10 and the 30-year. And the 5-year is at 29.36, 2.936%. All it has to do is to go above 2.941. That was the high in May. And it starts a monthly leg D. That monthly leg D would suggest with a strong MACD, moving average convergence divergence, and the stochastic at 88%, that the left side high that was made right there of 29.91 back in June of 2009 could be next. But it also says that perhaps by March of next year, if this particular pattern continues and the Dow does not take a huge pullback so that money flows out of equities into the so-called safety of bonds, you could be looking at something as high as the June of 2008 high of 3.744. So what has to happen here if for this to change? Look at the TNX. This is the one that most interest rates are year to, the 10-year. That has to go above. It's a 3.04, 30.44 right now. It has to go above 31.15, the high of May, to start its leg D. Then the 33.27, 200-period exponential moving average becomes a magnet. So it's going to be very important. The 30-year, which has this long down channel, has only just started to test the first Chapman Wave inside track resistance level. It's right there now at 31.91. The high in May was 32.47, and the MACD strong stochastics improving. It's a 66. It's always been one of the weaker of the indices. yield. So I'm watching this one as well. So today, the TLT, as it stands, this is pre-market, but this is the price. The TLT stands at 117.31. It had a very strong decline yesterday, leg E. The MACD is very weak in the daily. The stochastic's flat at 9%. Flat is not good. I like to see a nice V-shaped recovery. And the on-balance volume is close to a level where it could turn around. So 116.09 was the TLT low of May. It's trading at 117.31 right now. It's made another, this arch that goes to a lowercase H that goes to a lowercase m is in play. And if you look at the monthly chart, that is really not very good. It looks very much like it wants to make a lower low. So I'm watching the TLT, which means that the TBT perhaps is now very much in play. Huge breakout to the upside, leg E. And this is, in fact, a Chapman wave breakout, Chapman wave, a cup and level breakout. In the daily, the weekly chart says there's trend line resistance right here. The next trend line resistance will be somewhere at the 39 level for the TBT. So if there's going to be a pullback, watch 37.50. If the TBT at any point breaks 37.30 support, yields will start to come down and come down quite dramatically. All right, high-grade copper. High-grade copper is at this particular point down. It had a very nice rally yesterday, made a slightly higher high this morning. This is that cup formation potential, but at this point we're certainly looking at first H pattern, that's a lowercase h that can go to a lowercase m, and that makes the high of the 28th of August of 2.713 important. If it takes that out, that's going to be a very nice sign. At the same time, we can look at wood, which is the global iShares of the timber and forestry ETF. It's come back very sharply. It's still at a peak F in the monthly chart, together with copper. This is just saying internationally there could be some weakness if timber and forestry products are not meeting demand. Look, 83.88 was the high back in June, and here it is trading at 77.23 after hitting 74. So this is just showing more weakness together with copper. So that's the reason why I'm looking and I'm saying EUR-USD, which is the euro-dollar currency pair, this is going to be important. It's sort of stuck in this range. It's made, I spoke about this yesterday, it's made like a gull wing pattern, and that says that it should try for the 1.17s. It's at 1.166 right now, and yet it's just stuck. It hasn't been able to find that upside momentum, and the yen did find some momentum, but it hasn't broken out yet. USD JPY currency pair, it does look like it eventually wants to make a leg D above 113.21 in the weekly chart of the yen. So I got those down. Now let's go to crude oil. Very important. Crude oil trading right now down 9 cents. Been stuck in a little bit of a range, has this cup potential, but until it can get to 71.17 was the high back on the 4th of September, peak E, until it can get to maybe 71.50, that'll say, this crude oil really wants to go quite a bit higher. Meantime, it's just stuck in a range, has 68 support, and I would just write for now, say 70.70 resistance. I think I've done everything that I needed to, yes. So a couple of stocks I was asked about. Boeing did well yesterday. It's down just a fraction right now. It's in a leg C in the daily, still in this range. There's that, see how many times you've got this cup that goes to a second cup? I call it a soft W formation. Two U's next to one another. The second one's a little smaller. Will this break out? Very often this pattern continues for a little while, and eventually the low, the very low of the left side gets taken out. That would be at 311. I'm not sure because this weekly chart is starting to improve, and that monthly chart is held very well. Question about Triple M. Yeah, Triple M is at this point down 3 cents at 21.50. Had a big pullback from the 216.47 level. Down to the 206s, and now it's at 211. This is going to be a clue, because if Triple M in the next week, what's today, Wednesday? Yeah, by next Tuesday or Wednesday, if Triple M is trading at 219 or higher, it's at 211.50. That'll be absolutely fabulous action. If it's slipped under 205, that'll say, nah, it's stuck in this range. It just cannot break this cup formation in the weekly chart. So it's going to be a good clue. UTX, as I said, has had a really nice move up. Monthly chart leg E. Now, this is going to be very important. If you look at Amazon, so I'll do this before we run out of time. This is going to be just a half-hour session. Then you're going to go to Jason for his market kickoff. Just a fabulous show. Jason does really a wonderful overview of markets as well as I heard him talk about natural gas the other day. Look at natural gas at 2.94 right now. What a fabulous move from the 2.75 level. Yeah, this is very good action. Now, I've got a break coming up. I'm not sure if this is the last break. I should be back after this at 8:26. I'm not sure. But in the meantime, you will have Steve Rhodes coming up. You'll have Jason, and then you'll have, and then you're going to have, of course, Larry Pesavento.